Hi everyone, welcome back to the Smart Alpha Show. This is Yogesh, your host for the channel. As you know, the US has been strategizing about how to take on Iran and opening the Strait of Hormuz. Obviously, UN have nothing to do about that. So today, let's talk about something we can do. Today, we are going to discuss how you should position yourself for the defense landscape in India that is rapidly changing. Unfortunately, India does not enjoy very good relationships with the countries it shares borders with, which means you have to spend heavily on defense. The question is, how can you benefit from the increased defense spending? The ongoing Iran Israel conflict has surprised the world on many fronts, but the biggest takeaway for me was how drones and missiles were used. Iran has destroyed multiple THAADs, which are the anti-missile systems for the US, which cost around $300 million each. They've destroyed these drones, which cost around $30,000. To intercept each drone, these systems have to spend in the range of $1 to $2 million. Now, the exact numbers may vary depending on the system used, but the key insight remains the same. A very small offensive cost can create an extremely large defensive cost, and this changes the economics of warfare completely. Because in such situations, offense almost becomes the best defense. Just keep on shooting these cheap drones and drain your opponent financially. Over time, this can become financially unsustainable. And this is exactly why the world is now focusing heavily on two things at the same time. First, manufacturing drones, and second, building systems to counter these drones. For a country like India, this becomes even more important. Given our geopolitical environment and our relationship with the neighboring countries, India needs very strong capabilities in both drones and the counter drone systems. And over the last few years, India has actually started moving aggressively in this direction. Now, before we talk about the companies, let's quickly understand the five types of military drones. Think of it like a team. Each type of drone has a very specific role. The first category is ISR drones. These are basically eyes in the sky. They're used for surveillance, intelligence gathering, and monitoring enemy movement. This is actually the largest segment globally. The second category is strike or combat drones. These are the fighters. These drones carry weapons and are used for precision strikes on enemy targets. India is currently developing such platforms through DRDO's Ghatak program. The third category is kamikaze drones. This is a very interesting category. Think of it as a hybrid between a drone and a missile. These systems hover over a target area, wait for the right moment, identify the target, and then dive in and destroy it. One of India's leading examples here is Solar Industries' Nagasatra. The fourth category is logistic drones. These drones are used to deliver ammunition, supplies, and medical equipment, especially in difficult terrains like mountains or remote forests. Now, alongside drones, there's another rapidly growing category, counter drone systems. These systems usually work in three stages. First, sense. This means detecting the incoming threat using radars, cameras, and RF scanners. Second, decide. Here, AI powered systems analyze the threat and they decide the best way to respond. And third, defeat. This can be done in two ways, either soft kill, which means jamming or disabling the drone electronically, or hard kill, which means physically destroying it using lasers, interceptor drones, and guns. And the remarkable thing is that India already has domestic companies working across all these segments. Now, when we talk about the drone industry, people often focus on market size numbers. For example, the global drone market right now might grow from $15 billion to $22 billion. But honestly, these numbers are not the most important thing. Because when an industry is growing so fast, companies with strong technology and strong intellectual property can scale massively. A company doing 1,000 crores revenue today could potentially grow to 5,000 crores or even 10,000 crores in the next 5 years. Both the military drone market and the counter drone market are expanding rapidly. But interestingly, the counter drone market is growing even faster because defense systems around the world are trying to reduce the economic damage caused by the low-cost drones. India has also realized this gap. If you look at the Operation Sindoor, India relied heavily on systems like the S-400. Now the S-400 is extremely powerful, but the challenge is that it is also extremely expensive. Using a very expensive missile to intercept a very cheap drone is not the sustainable way to move in the long term. And because of this, over the last couple of years, orders for drones and counter-drone systems have increased significantly in India. This sector alone could become a multi-billion-dollar opportunity in the coming years. Many companies operating here are currently small, but they're making large capital investments to scale their manufacturing capacity and compete for upcoming government tenders. In this industry, the real differentiator will be the technology and the intellectual property. Another important factor is DRDO approval. Companies that are already registered with DRDO have a very big advantage because the approval process for the defense tenders can take between 3 to 5 years. Now, one important thing to understand is that the drone is not completely built by one company. It is actually very similar to building a car. There are multiple players involved in the ecosystem. At the first level, you have component manufacturers. These companies manufacture things like the chips, motors, and basic electronics. The intellectual property here is usually very limited. Then you have high-end systems like sensors and radars. These technologies are both extremely critical for both drones and counter-drone systems. And because they are difficult to build, they typically command a very high margin. Finally, you have platform integrators. These are companies that combine multiple components and subsystems into a final defense platform. A good example here is Bharat Electronics. Now, let's quickly talk about a few companies in this space. The first one is Solar Industries. Solar Industries is one of the India's largest explosive manufacturers, serving both commercial and defense markets. But over the last few years, its defense business has grown very rapidly. The company recently announced a 12,500 crore investment plan focused on drones and robotics manufacturing in India. They are also developing kamikaze drones and counter-drone systems, including platforms like Bhagrasatra. These systems have already received strong interest from DRDO. If you look at the financials, the growth has been remarkable. Revenue increased from around 2,500 crores in FY21 to almost 8,000 crores this year. Profitability has also grown from 300 crores to 1,200 crores. This gives confidence that as they increase their capex, they may be able to scale their defense business significantly further. Just have a look at the product range. All of these products are next generation products. A lot of R&D is required to create these kamikaze drones. And for some other products, they're also exclusive suppliers to the DRDO. The second company is Bharat Electronics, or BEL. BEL is one of India's largest defense PSUs. They manufacture radars, electronic warfare systems, communication systems, and counter-drone technologies. Essentially, they provide core electronics across multiple defense platforms. The company currently is on a massive order book of around 76,000 crores, and given its strong relationship with the defense ecosystem, it is likely to continue receiving a steady pipeline of orders. Interestingly, BEL has also demonstrated very strong execution compared to most PSUs. Revenue has grown at a roughly 15% CAGR, and operating margins have expanded from around 20% to nearly 30%. Going forward, growth could accelerate even further as defense spending increases. For BEL, this is just a part of their product range. Their product range is massive and won't fit with the presentation itself. But in the counter-drone and drone market, these are some of their products. The third company is Data Patterns, which is a specialized radar company. Relatively a smaller company, but they focus on high IP radar technologies used in both drones and counter-drone systems. Radar systems are required on almost every defense platform. They are currently sitting on the largest order books in their history. And because radar technology is difficult to replicate, they're able to maintain very high margins, sometimes around 35% EBITDA. Their revenue has grown from 200 crores to 1000 crores in the last 5 years. Also look at their profitability. PAT has increased from 50 crores to 250 crores currently. Given they have a very solid order book in hand, it is expected that they should continue growing and have a very strong order pipeline, which is highlighted by the management. As you can see, some of the radar systems on the slide are very high IP product, very difficult to replicate, hence they enjoy very high operating margin. Now, when we talk about valuations, one thing is very clear. These companies are not cheap, but given their strong growth prospects, high margins, and favorable geopolitical environment, it is unlikely that they will trade at very low valuations. Instead of expecting short-term multi-baggers, it may be better to think of them as long-term compounding businesses that could grow steadily over many years. We do analysis like this day in and day out at Magnus Hathaway Investments, constantly studying deep tech industries and how can our clients benefit from it. If you found this helpful, it would be great if you could subscribe to the channel and share this video with somebody who might benefit from it. Thank you for paying attention to this matter.